Welcome back. In today's video, we're going to take a deep dive into one of the more controversial and worrying conversations currently happening in the crypto world, the ongoing price spiral of Internet Computer, ICP. Over the last couple of years, many analysts, investors, and longtime supporters have begun to believe that the asset is not only in a downward trend, but possibly in a long-term pattern that suggests recovery may be further away than people would like to admit. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. When you zoom out and look at the bigger picture, the full price history of Internet Computer since its launch, you notice something troubling. The chart has been repeatedly carving out lower highs and lower lows, giving the impression of slow erosion rather than a healthy consolidation. On the surface, this might look like just another post-bull market cooldown, but when you pair it with the extraordinary level of innovation that continues to emerge from the ICP ecosystem, the disconnect becomes glaring. The Internet Computer Network is producing some of the most impressive technology in the decentralized world: scalable infrastructure, powerful compute functionality, and AI integrations that rival some of the best in the broader tech industry. And yet, none of that has translated into meaningful, sustained price growth. So in this discussion, we'll cover why that might be happening. We'll look at concerns raised by different voices in the community. We'll compare Internet Computer to other ecosystems, and we'll ask the difficult question: is this still worth holding in our portfolios? By the end, my goal is for you to have a clearer understanding of both the potential and the risks that ICP currently represents. Let's begin with the broader market. A lot of maximalists and critics alike have shared their views on where ICP stands. One notable comment recently came from a prominent supporter who argued that Internet Computer is currently over-leveraged. Personally, I'm not fully convinced that over-leverage is the right diagnosis here. What we may actually be witnessing is a consolidation phase inside a wider market context that itself seems to be winding down from a bull run. From 2023 into 2024, Internet Computer performed well relative to its position in the previous bear market. We saw prices climb from the $2 to $3 range all the way up to around $20 at the peak. That was a remarkable move for anyone who bought during the lows. But since then, the market has retraced, and as of late 2025, we find ourselves looking at a classic pattern: a big initial surge, a second rally that failed to surpass the first, a sharp correction, and now an extended period of sideways to downward action. For seasoned traders, this looks almost textbook, the final stages of a bull cycle. What happens next is harder to predict. Consolidation can sometimes lead to renewed momentum, especially if macro conditions improve or if a narrative suddenly reignites demand. But it can also morph into a slow bleed lower if confidence isn't restored. As investors, that leaves us at a crossroads. Do we continue to hold ICP on the belief that its fundamentals will eventually lift the price, or do we recognize that cycles can take years to recover and step aside until sentiment shifts? To understand this dilemma better, it's helpful to look at the kinds of conversations happening inside the ICP community and across crypto as a whole. One post circulating on X, formerly Twitter, compared the attitudes of different crypto communities. ICP holders are often caricatured as saying, "I'm here for the tech." Cardano holders insist the same, claiming their loyalty is rooted in technological superiority. Bitcoin holders frame their thesis around digital gold and long-term wealth preservation. Ethereum holders often seem split, uncertain about the evolving roadmap. Solana supporters dismiss Ethereum as outdated and lean heavily on performance metrics. And then you have the meme coin and pump-focused communities who openly admit, "I'm literally here for the pump, nothing else." When you strip away the rhetoric, the last group might actually be the most honest. Because ultimately, everyone is in this space for price appreciation. Nobody buys a token purely for philosophical reasons. If the price never moved, there would be little incentive for people to take the risk of holding. And yet, within the ICP ecosystem, there's a rising trend of people saying, "Let's stop talking about price." To me, That's not just misguided, it's dangerous. Price matters because it reflects both demand for the token and confidence in the network. If technology alone was enough to drive value, ICP would be soaring. The fact that it isn't means something else is at play. Pretending that the price doesn't matter, or worse, discouraging discussion of it, creates an unhealthy echo chamber. We've seen this exact mentality before in Cardano's community, and it led to years of frustration as the token underperformed despite ambitious roadmaps. Another factor that can't be ignored is the role of manipulation in previous cycles. Back during the last major bull run, entities like FTX and Alameda had a heavy hand in derivatives trading and perpetual contracts. Their excessive leverage created distortions in several markets, and ICP was one of the assets that suffered from those distortions. The dramatic collapse in price from earlier highs wasn't simply organic selling. It was accelerated by leveraged liquidations and institutional manipulation. Fast forward to today, and those same kinds of manipulative pressures may no longer dominate ICP directly, but their legacy lingers. Many investors remember how badly they were burned, and that hesitation can keep new money from flowing in. In 2025, one of the most exciting developments to come from the Dfinity team was the launch of Caffeine AI, a large language model designed to interact with and deploy code directly onto the internet computer. On paper, this was a huge step. When it was introduced in June and further showcased in July, many thought it could become the killer application for ICP. After all, AI is one of the hottest narratives in tech, and marrying AI with a decentralized network seemed like a recipe for explosive growth. But the hype didn't translate into price action. Instead of a sustained rally, ICP's price barely reacted. In fact, it mostly moved sideways during the entire period when Caffeine AI should have been generating maximum excitement. That's not what you'd expect from a supposed game-changing release. Part of the problem lies in perception. While Caffeine AI is impressive, it's not unique. Other large language models already exist, many with more funding and larger user bases. Moreover, Caffeine AI doesn't actually run natively on the internet computer. Instead, it deploys what it creates onto the network. That distinction matters because it dilutes the narrative that ICP is the exclusive home of this innovation. Add to that the fact that other players in the AI race, from OpenAI to Google and beyond, have dominated headlines, and you start to see why Caffeine AI failed to ignite the kind of momentum investors were hoping for. Another frequently discussed metric is the growing number of large ICP holders. Recently, the number of wallets holding at least 1 million ICP tokens hit a record high of 78. On the surface, this looks bullish. Whales are accumulating. Therefore, they must believe in the project's long-term potential. But here's the catch. If whales are buying, someone else is selling, and the price hasn't moved higher despite all this supposed accumulation. That suggests whales are acting more like sponges, soaking up the constant outflow of tokens from smaller holders, staking rewards, and developer sales. This isn't fresh demand creating upward pressure, it's existing demand preventing a total collapse. The danger is that when prices eventually rise, those same whales will offload their positions, capping the rally and keeping ICP in a tight range. It becomes a cycle of redistribution rather than growth. We've seen this in other ecosystems, and it rarely ends well for retail investors. The situation feels eerily similar to what unfolded with Cardano after its smart contracts launch in 2021. For months, excitement was high, but the network failed to produce killer apps that captured the market's attention. Price stagnated, staking rewards dropped, and sentiment eroded. Meanwhile, the community narrative shifted toward, we don't care about price, only technology. We know how that story played out. ADA underperformed, lost market share, and many early believers left disappointed. The risk is that ICP could fall into the same trap. Without visible applications that attract users and generate real revenue, all the technical brilliance in the world won't rescue the token from apathy. As of now, about 43% of ICP's total supply is staked, with roughly 60% of that amount locked in governance and rewards mechanisms. That means about a quarter of the entire supply is effectively off the market. In theory, that's bullish because it reduces circulating supply. But in practice, it also means that the network relies heavily on the willingness of stakers to remain loyal. If rewards diminish or if sentiment weakens further, unstaking could unleash significant sell pressure. We've seen this movie before in Cardano, Tezos, and other ecosystems where high staking rates didn't prevent long-term declines. Another core issue is Dfinity's focus. Instead of aggressively marketing the uniqueness of ICP's architecture, decentralized compute, subnet design, jurisdictional flexibility, and unmatched scalability, the spotlight has been placed almost entirely on Caffeine AI. While it's an impressive demonstration, it doesn't capture the essence of what makes ICP different. In the short term, that leaves investors unimpressed. They don't see the killer app, they don't see mainstream adoption, and they don't see the kind of buzz that can carry a token higher. Over the longer term, maybe this strategy pays off. But markets don't always reward patience. Narratives matter, and ICP's current narrative is muddled. So where does this leave us? Realistically, ICP has strong fundamentals and a visionary roadmap. The network architecture is second to none, and its potential use cases in AI, cloud replacement, and decentralized application hosting remain compelling. But the price action tells a different story. Since the start of 2025, ICP has dropped from around $12 to just $4, losing more than half its value and underperforming most other top 50 cryptos. That doesn't mean the story is over. Cycles are cycles. In the next bull run, ICP could regain momentum, especially if AI narratives converge with blockchain adoption in a more direct way. But for now, we're faced with uncomfortable truths. Enthusiasm has waned, key releases haven't moved the needle, whales may be suppressing price growth, and the community risks falling into the trap of ignoring price entirely. To summarize, Internet Computer remains a fascinating project with technology that arguably surpasses much of the industry. Yet the price tells us that markets care about more than raw tech. They care about narratives, demand, visible adoption, and confidence. The cycle pattern suggests we may be in the late stages of a bull market, with ICP consolidating at lower levels. Community sentiment is split, with some dismissing price discussions in a way that feels uncomfortably similar to Cardano's mistakes. Whale accumulation isn't necessarily bullish, it might just be soaking up sell pressure. Caffeine AI was interesting, but not transformative enough to spark a rally. The lack of new headline-grabbing developments since mid-2025 is worrying. Long-term potential remains, but short-term price prospects are cloudy. As investors, the decision comes down to time horizon and risk tolerance. If you believe in the decade-long vision of Dfinity and can stomach years of stagnation, holding ICP might make sense. But if you're looking for strong performance within the current cycle, it may be wise to be cautious. Either way, the conversation about ICP's price spiral is not going away, and it shouldn't, because price matters. Technology without value capture is just an academic exercise. For Internet Computer to fulfill its promise, it needs both innovation and market recognition. Until then, the spiral remains a reality we can't ignore. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching. Stay curious, stay cautious, and I'll catch you in the next one.